Hi, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're going to talk about reasons why we decided to fix on our mortgage.
Yep.
Fixed rate on our mortgage.
Another one.
Yep.
Yep.
So we have multiple investment property. A few days ago, actually about a month ago, we received a letter that our fixed rate with our lender is expired, and we decided to fix the rate again.
Yep.
So if you guys are thinking of doing, fixing your investment property or your principal place of home, whatever mortgage product that you have, you're bound to have a little bit of uncertainty because there's a few questions that I've seen in, in a few Facebook group where people wondering, should we fix it? Should we leave it in variable? And we'll tell you in our side of the story.
Our scenario, why we choose it to fix it. This is our third time to fix it now. I just remember.
Is it? Okay, cool.
I think so. I'm pretty sure it's our third time. Yeah.
So in the beginning of it, when we bought our investment property, we decided to fix it. I think it's like straight away.
No, it was variable first, and then it was when you start have to pay principal and interest together, and then saying investment property you have to pay higher interest if you choose to pay interest only. Yeah, so we chose it to change it to principal and interest together, and then fix it because the rate is just cheaper, a lot cheaper.
If you're trying to stretch your dollar or if you're trying to save some money, this is probably one of the way, especially if you have a mortgage product.
Yeah, but the only downside is you cannot pay more than $5,000. No, you can. You can pay $5,000 extra in
without
that
any
year.
Penalty.
Yep. Anything above that, they will charge you a penalty. We broke our fixed rate too before a few times. We like to break it because the bank lock you in because they can budget themselves. They can see the profit. But if you broke it, which means their income will be less, so you're just paying the compensation back to them. It's a win-win, I would say, because once the first time we broke it because the interest rate go down, so that's the downside. You don't know if the interest rate going up or down.
Yep.
So that time we saw, it's pretty low, we should fix it. Once we fix it, keep going down and down and down. And then we did a calculation. If we break it, we pay it and lock into a new rate, we still save more money, correct?
So that's one side of it. The other side of it is the reason why we fix the rate is because, especially if you are on a wage basis and you're not expecting to have bonuses or just week in week out the same amount of money coming in or coming out, every week how much your minimum repayment would be. So that's our reasoning.
Much easier to budget.
It's
fixed. And another thing is we like to pay weekly
instead of a monthly, which is defaulted when you open up an account on any mortgage. We change. If you change it to fortnightly, your repayment can go a little bit more faster.
Yeah.
But if you can change that again to weekly, and then if you can change it in daily, then great.
Yeah, but who's going to pay daily?
Yeah, it will be a bit tough. But on an average anyway, here in Sydney, Australia, what I've seen that most most job anyway, they get paid in a weekally, fortnightly or monthly. That's why we decided to do weekly because you can pay a little bit more faster.
Right.
So actually we might as well give them a little bit more on the good side of doing it. So we said it was for sure every week how much the amount.
Yep.
We fixed it because the interest rate is a lot lower compared to variable.
Variable, yes. Can we give them the number? Like the bank sent us a letter saying the variable rate, not just the variable rate. They will change it to 4.09 variable. So I forgot how much was the current. I think it was 3.59 current fixed that we already fixed before. And then they said, we're going to change it to your variable, become 4.09, which is higher. And then called the bank, if I want to fix it for 2 more years, what's the rate? 2.29. I don't have to think. Just under 2%.
So it went from 4.
Yeah.
Our current one is 3.
Yeah.
It went to 4 if it's variable, but if it's fixed, it's at 2.
Yeah.
Like maybe later on in the future, maybe it goes to 1. Okay, they're winning if it's 1.
Yeah.
But if it goes up into a 3, we're winning. That's the reason why we decided. And obviously, because we choose the 2, our repayment's gonna get lower.
Correct.
Our terms is still the same. I can't remember what is the term.
I think maybe 24 years.
Something like that.
Yeah, 24 years left.
So in this particular scenario, we've actually got a mortgage just about 200,000.
Yeah.
Yeah, that's about 200,000, just above $200,000 on this particular property. We decided to fix it at 2.29%. That would be, well, the old repayment, it was at 240 or something.
Yep.
$240 per week. The new repayment, on the other hand, it will be $211 per week.
Yeah, so we save
about
$30.
Now, budgeting aspect of it, yes, we did save $30 per week, but with that $30,
we're thinking to put it back in.
Correct.
Right.
So our repayment is going to be about the same. In fact, we're looking at a little bit more higher. Instead of $200, we're looking at putting in $100 on top or something like that, because our product, we can pay up to $5,000 a year, which is just about $100 a week.
Yeah.
On top, without occurring any more penalty.
Correct.
So that's our product. Your product might be a little bit different.
Check with your lender.
Correct. Right. So, because I've seen a product where you can pay up to $35,000 a year.
I think maybe depends on your loan size as well, because our loan size is not as
kind of small on this one.
Yeah.
So
another strategy we forgot to do was I think we did it last time.
Yep.
So what we done last time, we broke the interest rate, the fixed rate, because it's going to be a lot lower, and that time we had some extra cash.
Yeah.
So we paid down the mortgage. Let's assume the loan was $300,000, and then we pay down. We broke it. We pay penalty, and we don't capitalize in the loan itself. We pay it from another transaction account.
In our cash account,
correct. We pay it from our pocket instead of put it on the loan, because bank, I think normally they will just put it on
put it on the loan,
which means they will get more interest from it. So don't capitalize in your mortgage. Pay it from your cash if you have.
Yeah.
If you don't, well, you have no choice. Anyway, we broke it. We pay cash for the penalty, and then we pay extra, say $50,000 in there, and then we lock in for another 2 years. So we make the most of it.
Yeah. So I mean, for this particular one, I think they did mentioning it. If you want to lock it, there's a administration fee. I don't know what it was, $300 or something like that. Whatever that admin fee is, it is in their best interest to put that on your loan. You don't have to pay it now. It's equivalent to like paying it later in a sense.
But then you pay in a 30 year with that interest.
Correct.
And on your loan is quite a lot in 30 years.
Over 30 years.
Yes.
So, and for us, instead of that, nope, automatically, no, take it out from my account, from this account.
Yeah.
Because I know like what they're trying to do is obviously maximize their profit by adding more interest. So in a sense, don't get trapped in that aspect of it. The get it now and pay later type of style. I looked at mortgages is equivalent to your credit card now.
Yeah.
So we're looking at, if you can pay it faster, obviously you're paying less interest, more money in your pocket. Anything else?
Yep, that's right. No, we save $30.
So we save it. Not only we save $30 per weekly repayment,
but we're also paying down the loan faster.
Yeah. So this is, I guess, the myth of should you lock in your interest rate or not?
It's each to their own. Some people, they like to lock it 50-50, and I'm like, it's so complicated. I don't know what. I don't know. So they leave 50% as variable, and another 50% to fix it.
Yeah, there's that aspect.
There is that, but for us, I just like to lock it at the cheapest rate. If I don't like it, I'll just break it. I'll pay for it, but then I know I'll just do a calculation. It's all numbers game.
Yeah. For us, this is, I guess, because we're not expecting a big lump sum in one hit anyway. I'm not expecting to get a massive compared to the other one.
Yeah.
So in the next 2 years, I'm not expecting that. But if you're working one of those commission sales type of job, and if you know you're going to have, a big lump sum every quarter or whatever cycle it is, then it might not be a good idea for you to do this.
Yes, correct.
So. I mean, if you can pay off $200,000 in a year,
then
do that.
Correct.
Unlock it. But for us, we're not expecting that. We're looking at getting rich slowly.
Yeah.
Anyway, that's just our 2 cents, guys. The reason why we fix our mortgage, and hopefully it gives you a lot more clarification.
Yeah, probably helps. See you next time.
Bye.
Bye-bye.